The electric vehicle revolution is proving to be a formidable challenge for Volkswagen, leading to some unexpected strategic decisions from the company. The CEO of Volkswagen has recently made a striking declaration, signaling a significant shift in their stance towards EVs. This announcement, marked by an emphatic statement about the company's competitiveness and financial health, has surprised and perplexed many in the industry. In a surprising move, Volkswagen has allied with an unlikely partner, aiming to navigate through these turbulent times. Despite experiencing a significant drop in demand, the company has taken a firm stand against reducing the prices of their EVs. This decision comes alongside some drastic measures, including substantial workforce reductions, halting EV production, and facing potential threats from competitors, particularly from China. The core issue at hand is the performance of electric vehicles in the market, which seems to be impacting not only Volkswagen but also broader economic segments. This raises several critical questions. Are EVs inherently flawed? What specific challenges is VW facing? Is it possible that this automotive giant might shut its doors, and what does the CEO's secret partnership entail? Volkswagen, known for its rich history in car manufacturing and as one of the world's largest automakers, is at a crossroads. The rapid evolution of the EV market is highlighting Volkswagen's struggles with adapting. From outdated interiors to pricing issues, VW finds it increasingly difficult to keep pace with the electrification trend. Interestingly, Volkswagen is under external pressure to produce electric vehicles. Diving deeper, VW's CEO Thomas Schaefer recently issued a stark warning during an investor meeting, revealing the company's escalating debt and competitive challenges, particularly in the EV sector. This revelation was a significant wake-up call for many. The company's response has been to pull back from EV production, a decision reflecting the severity of their situation. Illustrating the extent of its financial strain, it even implemented a fee for emergency GPS services, as highlighted by an incident in Illinois involving a carjacking. Volkswagen's predicament is further compounded by the competitive landscape, with rivals like Tesla and BYD offering a range of affordable EVs. Additionally, external factors such as the pandemic and the Russia-Ukraine conflict have disrupted its supply chain, adding to their challenges. As a result, Volkswagen's path forward appears uncertain, with many variables at play in this rapidly changing automotive landscape. In a significant move to address its financial challenges, Volkswagen announced in June its intention to reduce costs by an impressive $1 billion. This decision was underscored by a sense of urgency expressed by CEO Thomas Schaefer during a staff meeting in Wolfsburg. Gunnar Kilian, a member of Volkswagen's board of management, indicated a strategic shift away from EVs as part of this cost-cutting initiative. Schaefer's statement about the company being in a critical situation wasn't just for effect. It reflected the acute challenges Volkswagen faces in balancing the transition to EVs with the demands of the global market for traditional internal combustion engine vehicles. During a meeting with over 2,000 senior managers, he emphasized the need for an immediate halt in spending due to escalating costs. He prepared them for potentially difficult times ahead, advising a focus on achievable, incremental successes. However, Volkswagen's challenges extend beyond internal restructuring. In China, VW's primary market, sales have declined, forcing the company to reduce prices on their most lucrative models to remain competitive against Chinese brands, impacting both their electric and traditional vehicle offerings. In October, the situation led VW to cease production of two of its leading EV models in German factories, attributing this decision to reduced demand following cuts in government subsidies. These subsidy reductions particularly impacted Volkswagen, as a substantial portion of the EVs produced at their Zwickau factory are for corporate clients. Consequently, about 1,000 employees at this facility faced layoffs. Furthermore, rising costs in Europe are compelling VW and other manufacturers like BMW and Tesla to consider shifting production to China, with plans to export these vehicles back to Europe and other markets. Volkswagen's strategy also includes producing its new electric SUV, the Cupra Tavascan, in China for its European launch next year. However, this approach faces uncertainty due to ongoing EU investigations into Chinese EV subsidies. This strategy could also affect the US market, as these vehicles may not qualify for EV subsidies, potentially elevating their prices even more. Amidst these challenges, VW has forged a partnership with a confidential collaborator. But to understand why Volkswagen's EVs are struggling in the market, one must consider the broader context of the EV industry. The market has been volatile, with initial expectations of rapid EV adoption being tempered by reality. One significant factor is the hesitance of the middle class to invest in EVs perceived as overpriced and with limited range. There is also skepticism about the claims made by manufacturers, compounded by the inadequate charging infrastructure currently available. Moreover, automotive companies like Volkswagen, Ford, and GM are experiencing intense governmental pressure to transition from internal combustion engines to EVs. This shift, while environmentally motivated, overlooks the affordability crisis for average consumers seeking vehicles under $20,000. The initial excitement surrounding the potential of EVs is now facing a reality check, with demand for EVs showing signs of decline. Cost remains a major barrier to wider EV adoption. The average selling price of an EV, as reported by Cox Automotive in November, was approximately $66,183, making it relatively inaccessible for many consumers. Additionally, the challenge of charging these vehicles is significant. In the US, there are about 141,142 charging stations, but many of these are slower, non-functional, or not easily accessible, further complicating the transition to electric vehicles. In the face of a challenging EV market, major automakers are re-evaluating their electric vehicle strategies. GM and Ford have halted new EV factory projects and revised their sales targets downward. Even Honda has backed away from a joint venture with GM to produce affordable EVs. Battery manufacturers such as Panasonic and LG Energy Solution are also signaling caution about the market's future growth. Volkswagen's response to these market conditions is notably different. Despite a decline in sales, the company has chosen not to reduce its prices, diverging from the approach of other manufacturers who are offering discounts to maintain market share. VW's Chief Financial Officer, Arno Antlitz, explains this decision as part of a wider strategy to regain profitability, focusing on reducing costs in other areas. However, this approach might risk alienating customers as it seems out of sync with their expectations. Volkswagen's recent financial reports have shown some strain, particularly about raw material costs. Their preliminary results for the third quarter have led to a downward revision in their profit margin forecast for the year. Despite these challenges, Antlitz remains hopeful, citing a modest uptick in EV orders during the third quarter and expecting further growth in the future. However, Volkswagen is exploring new opportunities for collaboration. They are currently in discussions with Renault about developing an affordable $20,000 electric car. This project aims to make EVs more accessible to a broad audience, potentially revolutionizing the market with a vehicle for the masses. Although these talks are still in the early stages, the potential impact of such a partnership, targeting an annual production of 200,000 to 250,000 vehicles, could be significant. Additionally, Volkswagen is partnering with XPeng in China to produce cost-effective batteries and develop 10 new EV models priced under $30,000 over the next 5 years. This strategy indicates VW's commitment to making EVs more affordable and accessible. However, the success of these ventures is still uncertain. Can Volkswagen navigate these challenges and remain a contender in the EV race? Share your thoughts in the comments below.